If you're a veterinary practice owner and your revenue has grown, but your stress hasn't gone down, this conversation's for you. There's a stage of practice ownership almost no one warns you about. It's not startup, it's not struggling, and it's not decline. It's growth. The phones are busy, appointments are full, you've hired more people, production is up, revenue looks better than it did last year. But your bank account still feels tight. Payroll still makes you hesitate, and somehow, despite all the growth, you still feel financially behind. That disconnect is where a lot of owners start questioning themselves. But here's what's actually happening. Growth in veterinary medicine is front loaded with expense. You add payroll before margin stabilizes. You increase inventory before collections smooth out. And you take on more management responsibilities before your efficiency improves. And you invest capital long before you see the return. Most owners expect growth to create immediate financial relief. In reality, growth usually creates more financial pressure first and comfort later. So when you don't understand that timing, pressure feels like failure, but it's not failure, it's transition. And today isn't just about understanding why this happens, it's about what financially stable growth actually looks like and the specific adjustments that help practices move from pressure into control. Because growth isn't supposed to feel easy, but it is supposed to feel understandable. I'm Cassie Sykes. I'm an enrolled agent based in East Texas, and I work almost exclusively with veterinary practice owners across the country. My focus isn't just tax returns, it's financial structure, margin visibility, owner pay clarity, cash flow stability. And one of the most common conversations I have with practices that are growing is this. We're making more than ever, so why does it feel so tight? What I'm going to walk you through tonight or today is the financial anatomy of growth, and more importantly, the small structural changes that immediately reduce pressure, even while your practice is still expanding. Revenue growth is gross, profit growth is net. When your production increases, your cost of goods increases almost immediately. More drugs, more lab costs, more disposables, more pharmacy restocks. Those are all variable costs, or those are variable costs tied directly to your production. At the same time, growth often triggers semi-fixed increases. You add another technician, you extend your hours, you increase DVM pay, you raise wages to stay competitive. If pricing has not been intentionally reviewed in the last 12 months, your margin percentages may actually compress during growth. So you're working harder, producing more, collecting more, but keeping roughly the same percentage or sometimes even less. That gap between revenue and margin is why growth can feel hollow financially. Revenue is loud, margin is quiet. Margin is what determines whether growth feels like success. So here's the practical adjustment. Every growing practice should track margin percentage, not just revenue totals. A simple starting point is this. If your revenue grows but your profit percentage stays flat or declines, pricing or service mix needs review within the next 90 days. You don't fix growth stress by chasing more appointments. You fix it by protecting margin per appointment. That single shift changes how growth feels financially. The next section is payroll. Payroll is typically the largest expense category in a veterinary practice. When growth hits, payroll expands in multiple layers. You hire additional staff, you increase overtime, you raise wages to retain talent, payroll taxes increase, workers' comp increases, benefits increase, training hours increase, management time increases. And here's what most owners don't calculate. Inefficiency during onboarding. New hires take months to become fully productive. During that ramp-up period, payroll expense is at full weight, but production contribution is not. So during a growth phase, payroll can temporarily outpace margin improvement. If payroll creeps above sustainable percentage ranges without pricing adjustments, cash tightness follows quickly. It's not a moral failure, it's a math problem. The solution is not to cut payroll. The solution is establishing a target payroll range before hiring. Most stable practices operate with total payroll, including taxes and benefits, within a predictable percentage band of revenue. When hiring decisions are tied to production capacity instead of stress level, payroll stops surprising you. Growth feels chaotic when hiring is reactive. It feels controlled when hiring follows the math. Veterinary practices are daily revenue businesses with fixed biweekly obligations. Payroll hits on schedule, rent hits on schedule, loan payments hit on schedule, vendor terms hit on schedule. Collections fluctuate daily. Even if you're profitable on paper, if cash timing is uneven, your stress increases. When you grow, payroll gets bigger, inventory orders get bigger, debt payments get bigger, but collections don't necessarily smooth out immediately. Growth will expose weak cash reserves. Many practices that feel broke are not unprofitable, they're undercapitalized for their size. There's a difference. The immediate fix here is visibility, not profitability. Every growing practice should know two numbers weekly: upcoming 14-day payroll total, current operating cash runway. When owners start looking at cash timing instead of just bank balance, anxiety drops quickly because surprises disappear. Cash stress usually isn't about losing money, it's about not seeing timing early enough. Most veterinary owners reinvest aggressively. New equipment, remodels, expanded services, marketing campaigns, additional square footage. Reinvestment is often necessary for growth, but without a defined owner compensation plan, the owner absorbs the delay. You may be generating enough profit to support higher distributions, but if every dollar is recycled back into operations without structure, your personal financial picture stays stagnant. So emotionally, it feels like we're bigger, but I'm not ahead. Growth without a distribution strategy creates owner burnout. Not because the business isn't working, but because the owner never feels the reward. The adjustment here is creating a defined owner pay structure even during growth. That doesn't mean pulling large distributions immediately. It means deciding in advance what percentage of profit goes to operations, reinvestment, and owner wealth. Without that structure, reinvestment becomes endless. With structure, growth starts rewarding the owner again. Growth doesn't create problems, it magnifies them. So if inventory tracking was loose before, your shrinkage accelerates. If pricing hasn't been reviewed, margin erosion compounds. If books are 2 months behind, decision-making becomes reactive. If KPIs aren't reviewed monthly, trend lines are missed. Small inefficiencies become expensive under higher volume. Owners that interpret stress as "we're not good at this." In reality, the systems simply haven't matured to match the size of the practice. Structure must grow with revenue. If your structure lags, your stress is going to rise. The goal isn't to perfect your systems overnight. The goal is one monthly financial rhythm. You need to review your margin, review your payroll percentage, and review your cash position. Practices that implement just those 3 monthly reviews regain a sense of control faster than almost anything else. Growth stops feeling unpredictable when decisions become scheduled instead of reactive. If what we covered today highlighted gaps, uncertainty, or even just a sense that things could feel more organized, that's completely normal. Most veterinarians aren't missing effort, they're missing clarity. The challenge usually isn't effort or intelligence, it's seeing how the financial pieces connect inside your specific practice. If you want help applying this to your actual numbers, you can book a free profit and cash flow analysis. In this call, we'll walk through your income and cash flow, identify what's working, where your money may be leaking, and map out clear, practical next steps. No pressure, no jargon, and no unnecessary digging into your practice books. This isn't about changing everything. It's about understanding what your current structure is actually telling you. You can grab a time at the link on the screen, or I'll drop it in the comments as well. Before you go, I want to share an incredible resource designed to elevate your veterinary practice's financial success. I put together a free ebook just for you. It's called 7 Financial Strategies. Inside it, you'll discover practical steps to increase profitability, improve cash flow, and make smarter financial decisions for your practice. You can grab your free copy in the comments. That is it for today. If this helped, please pass it along to another veterinary owner who could use a clearer picture of their numbers. And if you're ready to get yours dialed in, go ahead and book that free profit and cash flow analysis. See you next time.